The next presentation is our mineral investment analysis, and our guest for that is Ross Bhappu, and really an old friend of mine, who is the president of Energy Fuels Corporation and the retired from the Resource Capital Funds. And Hello, Ross. It's good to see you. And so I think that Ross's position, really working with the capital funds as well as his current position in energy fuels. And Ross, would you like to just expound on what Energy Fuels business plan is and how that fits into the picture of the current investment in the minerals industry?
Sure, John. Yeah. First of all, great to see you again. It's a friendship that goes back many, many years. So I'm delighted to be here. Um, yeah, look, I'm with Energy Fuels. I've only been with Energy Fuels coming up on 3 months now, so I'm fairly new to the company. Energy Fuels is a long-standing uranium company. We've been in business in various forms for the last 45 years or so. Um, and it's interesting, the uranium business has been quite cyclical over the years, but through those years, we've maintained our production of uranium. We're the U.S. largest producer of uranium today. But what's interesting is just before COVID hit, we started looking at utilizing uranium processing capabilities to try to figure out if we could apply those to other commodities. And what we've discovered and over the course of the last 5 or 6 years is that rare earth processing, almost all rare earth minerals have some level of radioactive signature to them, whether it's uranium or thorium. So you can't process rare earth minerals without dealing with the radioactive material in some form. Um, our team at the White Mesa Mill in Blanding, Utah, has been able to modify the uranium processing circuit, which is primarily solvent extraction, to treat monazite primarily, which is a rare earth bearing material. And so today, Energy Fuels is both a producer of uranium as well as rare earth minerals, primarily NdPr, neodymium and praseodymium, but we've also recently demonstrated our ability to produce the heavy minerals, which are quite critical to magnet production and permanent magnet production. And so we've produced dysprosium and terbium. We're in the process of producing terbium as well. It's been kind of fun because one of our first batches of neodymium has recently been processed. It's produced metal, and that metal's now been turned into magnets, and we're actually seeing it in vehicles that are being produced today. So it's quite exciting, an exciting time for Energy Fuels, and I'm delighted to be here and be a part of it. And I have to
Now,
say
now
that,
when we're talking about these various metals, Ross, is the actual product is a metal on as we typically understand it?
well, so yeah, our product is actually today it's oxides. So it's neodymium, praseodymium oxide, it's dysprosium oxide, and those, and then we sent our neodymium and praseodymium oxides to South Korea, and a third-party facility in South Korea then processed them to produce the metal and the alloys. So our right now our process stops with producing the oxide, but we're hoping at some point in the future to move into downstream processing and produce the metal, the alloys, and ultimately the magnets.
Now, is that one of the big problems with rare earths these days is the lack of processing capability?
Well, John, I think it's two things. I think it's number one, the lack of molecules. We've got Mountain Pass, which I was involved in kind of early on, but Mountain Pass is the U.S. Major producer of rare earth minerals, but it's sort of a drop in the bucket for what we consume and what we need. And so, we're trying to be additive to that process and help support the U.S. from being less dependent on other countries. And China is the dominant producer of rare earth minerals. China's, more importantly, the dominant refiner of the rare earth minerals into metals, alloys, and magnets. And so that's it's a combination of a lack of molecules outside of China and a lack of processing capability. And so we're trying to be part of the solution here in the United States, and we're making good progress in that regard.
Now, could we talk a little bit about Mountain Pass? Now, the that one was ultimately shut down as a result of uh, the Chinese decision to pull it back, wasn't it?
Well, it was a combination of things. We back in 2008, I was involved with a group to acquire Mountain Pass from Chevron. Um, we spent a lot of money, a lot of time rebuilding the Mountain Pass mine, putting in a lot of new technology to process it, and we had some technical challenges with that. But more importantly, we had the Chinese were just dumping rare earths on the market, kind of in that 2014 timeframe, and drove the price way down, made it very challenging for us to compete, along with the technical issues we were faced with, and effectively drove the company into bankruptcy. Um, Today, Mountain Pass through MP Materials has come back, and they've been processing materials, but they've been utilizing some Chinese um, uh, assistance in downstream processing. And I think again now they're trying to pull that back and bring it all into the U.S. so it's all processed here in the U.S. So it's been through a challenging, turbulent time, but I think the U.S. government has realized that it's an important sort of national treasure and important to security of U.S. national security, and so we're seeing that, and we're hoping to be part of that solution as well.
Now, do the Chinese own the technology that is required to process the rare earth?
Well, they own some of the technology. I think it's more know-how than it is um, um, technology. I think the the Chinese have been processing these minerals and have developed processing techniques for these minerals where they really do control a lot of that. But a lot of it is technology that was developed here in the U.S. MagnaQuench, for example, was a U.S. company that got up and moved to Asia and took the technology with it, and is now we've sort of lost those capabilities here in the U.S., but I think we're getting them back, and we've got some amazingly talented scientists, some that work right here for Energy Fuels that have developed our own internal processing capability, and we're able to produce rare earth minerals right there in Blanding, Utah, at our White Mesa mill. I'll just mention that the White Mesa mill is the only permitted conventional uranium mill in the United States, and there were a number of them back in the 70s and 80s, but we're the only one that remains, and we're an entity that is capable of treating Class 7 radioactive material, and that allows us to not only process uranium but also these uranium-bearing rare earth minerals. So it gives
Now,
us a
when you say Class 8,
Class 7.
Class 7, what does that mean?
It's a classification of radioactive material that is a U.S. standard for classifying radioactive material, and if you're dealing with material that's class 7, you have to have special methods of handling, transporting, and permits to actually process it, and we have those permits and licenses, and
Now,
uh,
is that the level of radioactivity of the material?
it's the fact that it is radioactive material that we're dealing with. And
Hmm.
so it's just a classification that it is radioactive uh, at a certain level.
Now, when we're looking at what I really wanted to visit with you about is the climate on investment in rare earths and uranium and some of these other critical minerals. The is most of the investment coming from let's say the shareholders within the various companies?
Yeah, it's a really interesting dynamic. I think we've seen money flowing into this sector and then drying up and then flowing again. I think the fact that the U.S. is being supportive of wanting to see critical minerals processed in the U.S. is really important. The fact that the U.S. government put money into MP Materials and took a ownership share. They've done that with lithium as well. I think that's driven a lot of interest in what we're doing. I think the fact that critical minerals is viewed now as a national security issue, which it very much is. All of a sudden, I think the investment community is realizing that this is something that the U.S. needs investment in, and it's a great place to make money. And so we've seen a renewed investor confidence in critical minerals specifically, but mining in general. And so we've seen the investment community starting to move and take more and more interest in not only what we're doing, but what the mining industry is doing to help protect national security in the U.S.
Now, when the U.S. takes a is it a direct interest in the company? How does that work?
Yeah, it's interesting. So in the case of MP Materials, they provided a price floor for the product. So the NdPr, they've provided a price floor. They've, as I understand it, they've provided some loans and loan guarantees, and then they've also taken an equity stake in the company itself. So it's a really interesting model that I don't know that I've ever seen with the certainly within the U.S. government, but with any governments, you don't see them typically taking equity stakes. You do see them taking providing loan guarantees or loans, which the prior administration provided loans for critical minerals through the loans program office at the DOE. I think this is more DOE driven, or sorry, DOD driven, I guess the DOW now. So the Department of War is saying these are critical minerals needed for national security and national defense, and so they've taken a different approach, almost like a private equity type approach to investing in some of these minerals. And as a result, I think the market's taken a much stronger interest in investing alongside and being a participant in that. So we've seen it with Energy Fuels. Energy Fuels, we recently did a $700 million fundraising just 3 weeks ago. Very successful fundraising. It was oversubscribed. It was all done through the private sector. There was no government involvement. And so we had a very successful fundraising on the back of this offering.
Would part of that be a guaranteed price on the metals produced?
That's what the U.S. government did in the case of MP Materials, and I think other companies are certainly looking to see if they can participate in those sorts of deals with the U.S. government. In the rare space, to my knowledge, MP Materials is the only one that's received that sort of a deal from the government. But I think there's a lot of companies out there that are hopeful that they'll do more of those sorts of deals. And John, I think the issue here is that we don't play on a level playing field with China. The Chinese rare earth producers aren't faced with the same environmental and human rights regulations that we're faced with in the Western world. They also are, as state-owned enterprises, they are subsidized, and they can manipulate the price of these commodities by flooding the market or restricting the market. And so we find that we're on a unlevel playing field. And as a mineral economist, I don't like necessarily the idea of government intervention, but when you're playing on an unlevel playing field, I think it's actually important in this particular case when you're dealing with national security that the U.S. government does step in and provide support.
Yeah, well, one of the issues that we have under the general mining law, for example, is that in order to have a valid claim, you need to be able to show that the materials you can produce minerals at a profit.
Hmm.
And so that makes a big difference if there is a guarantee or some form of a guarantee of your baseline, so that you can shoot for that.
That's right. I mean, that in the case of MP Materials, that price floor gives them sort of a guaranteed minimum price that they'll receive for their material, and it helps ensure their profitability. So it's a very attractive deal for MP Materials, and but there's other ways that the government can support groups like us and other groups that that don't have deals like that, whether it's through offtake arrangements, loan guarantees, and or loans, direct loans. I mean, there's a whole host of ways that the U.S. government can be supportive, and those price floors is just one of them.
What sort of loans do we have out there that, from your perspective, that
Well, look, I think ideally they would be loans that have long tenors, long lives to them, that allow you to repay the loan over an extended period. There's also low, the interest rates on those loans, making them attractive interest rates. One of the challenges, of course, is that building these large scale projects can often take a long time, and so having a sort of a holiday during the construction period on having to repay that loan is important. So, these long tenors are quite important, and then low interest rates. Look, John, I think the other thing that the U.S. can be very supportive in and helpful in is permitting reform and regulatory reform. The U.S. It takes incredibly long periods of time to permit projects in the U.S. Um, and what I find is that mines that I've built or that I've been involved in building pretty much anywhere in the world, whether it's Australia, Canada, or you go even to African nations where we were involved in many different mines. Those mines are all built to very similar standards. But the regulatory process you have to go through to get the permits to build those mines varies significantly country by country, and the U.S. is one of the very worst in terms of the amount of time it takes. So, if you don't have a project that's already permitted in the U.S., it can often get tied up in the regulatory environment, but that also leads to litigation. And so I think where the U.S. can be very helpful is in litigation reform and regulatory reforms that help expedite the process by which you get these projects permitted. And so I think in addition to the financing, getting help on that regulatory side would be very important. Again, not looking to cut corners, but just looking to streamline the process and not take years and years to get through that process.
do you think part of that is the background of the regulators is that it takes too much time to educate the regulators as to the issues involved?
That might be part of it. I think some of the regulators that we deal with, we deal with the state of Utah regulators. They are very up to speed on what we do and how we do it. So it's not so much an education process. I think they're limited in the resources they have. So, providing assistance with consulting firms that can help just move this through the system, I think would be helpful. But then again, the other big part of it is just the legal litigation reform. You can find almost a frivolous lawsuit blocking the issuance of permits, or once the permit's issued, blocking those permits and tying them up in courts for years and years. And we've certainly seen that in Arizona with some of the copper projects that are being developed there. Yeah, I do see real value in some reform on how those how that litigation is managed through the system, the permitting system.
We've talked mostly about rare earths and uranium. Is lithium is another one of the products that people have been paying a lot of attention to. Does Energy Fuels have are you in the lithium business too?
No, we're not in the lithium business. There's a lot of lithium producers out there, and it's just not a commodity that we feel we have a competitive advantage in right now. And we have a lot on our plate with uranium and rare earths. We also are in the heavy mineral sands production, and that's titanium dioxide, um, and it's used in various applications. But our focus is really the uranium, rare earths, and heavy mineral sands, and all the sort of products that go along with those. So we're actively producing, call it 10 different critical minerals that are listed on the U.S. critical minerals list, but it doesn't include lithium at this stage.
Now, when you say heavy metals, you want to explain that a little bit more with people so people understand what that is?
Yeah, heavy mineral sands. It's various forms of titanium dioxide. It's rutile, ilmenite, and then zircon is typically a byproduct of that as well. And these are and titanium dioxide goes for use in one case producing titanium metal that goes into airplane manufacturing, of course, and other critical components. But a lot of titanium dioxide, it's a very pure white pigment. It goes into the pigment industry, and so it's used for paint. If you go to your Home Depot or Lowe's and buy paint, a big part of what's in that paint is titanium dioxide, and that gives you the opacity and the very bright white colors that paint has. And so titanium dioxide is incredibly important as a paint pigment, but then also in plastics and car bodies. It's used in a whole host of different applications. So very important. And then zircon, also a byproduct. Zircon's used in ceramics, and I think people that have implants in their teeth, for example, those are often made out of zircon, very high quality ceramic material. So quite of a wide range of materials there.
Well, I think that the main reason I wanted to visit with you this morning is to talk about the investment climate
Hmm.
for this. Now, you said that you recently went through an offering that was very successful. That was that on the U.S. stock exchange?
So yeah, we are a New York Stock Exchange listed company, and we raise the money here in the U.S. We raise the money through a convertible note offering. So it's a debt facility that's convertible into equity. But what's a unique aspect to it is we put on in place what's called a capped call. A capped call means that we effectively buy an option over the shares that would be issued if those shares are converted, if those notes are converted into shares. And so it's a way of raising money at a very low cost, very low interest rate, but with minimal dilution to our shareholders. And so it's a very unique product. It was very successfully launched, and we've had great reception. Our share price has traded very well post doing that fundraising. So we're really excited by not only the fact that we were able to raise all this money, but we did it with minimal dilution, and it's very inexpensive in terms of an interest rate tied to the note.
Now, are other people doing taking similar action?
They are. It's a popular product, and other companies have taken advantage of it. So we are seeing it more and more. But I, yeah, I would say that there's been a few. I don't know of any that were as successful as ours in terms of the interest rate that we were able to receive in that, and we were heavily oversubscribed. So we had way more people that wanted to buy this product than we had availability of product to sell in terms of these notes. So it was an exciting opportunity for us to put that out there and raise, like I said, $700 million, which is a fantastic amount of money.
You want to go into a little bit more detail as how the product works?
Well, there's two components to the product. One is it's a convertible note. So the convertible note is effectively just um, people are loaning us money at an interest rate, and at some point in the future, they can either get repaid in cash or they can convert that note into equity in our shares, in shares of our company. So we did the offering at, call it 15, just a little over $15 a share. We had a 20% premium, so it would convert uh, at call it $20, a little over $20 a share. But we on top of that, we put in place this capped call provision, which effectively is a separate, sort of a separate financing product that once that allows for, it's sort of, think of it as an insurance policy that allows you to not have to dilute your shareholders once they convert those notes into equity. And so it's a very unique offering that has become more and more popular across a wide range of industries, and so we're seeing it being applied here in the mining industry very successfully, and we're one of the few that have done it recently. So it's just a way of putting a convertible debenture into the market that minimizes the amount of dilution to your shareholders. And I think that's why it's so attractive to investors in our company, because they don't face the future dilution that would typically come with a convertible note structure.
Well, that sounds like uh, an impressive way of getting things done and raising money. Now, have people done this before? Or is this something new?
No, others have done it. I think it's a fairly, I think it's fairly new, but it's been done over the last couple of years. But yeah, I think it's something that we've seen more and more of recently, and I think it's just something that there's good appetite in the market for these sorts of products where investors uh, can get great returns. And I think the key is that these investors are looking for future upside in your share price, and that's why they want to invest in, in those convertible notes that have a conversion price that they feel is low compared to what the future price could be. And that's what the attractive returns for them is, that the share price will go up and exceed that conversion strike price in the future.
Yeah, so that puts a base on a baseline on the strike price so that they know they have a guaranteed return at that price.
Yeah, so they will either, that's right. So they will either make money off the interest that's being paid on the note, or I think more interestingly for the investor is they're looking for the equity appreciation that they can participate in the future.
Interesting.
Yeah.
Well, I'm happy that your program worked out so well, and that now that the money that you're getting through this process does that go into the construction of the processing facilities at Energy Fuels?
Yeah, great question. So we have effectively four different major projects that we're working on. One is this White Mesa Mill, which is where we process the uranium. Again, it's the only licensed and permitted conventional operating uranium mill in the United States today. We're looking to expand that over the next couple of years to expand both, not only the production of rare earths, but also expand our capabilities in uranium. Um, so part of the money will be used to fund that. We're calling it our phase two expansion. We also have a heavy mineral sands and rare earth project in Australia that we're partnering with in developing it. And that project, called the Donald Project, part of the money has been earmarked for that. So the bulk of the funds that have been raised are earmarked for those two properties, or two projects that we have. We also have projects in Brazil, a heavy mineral sands and rare earth project in Brazil, and then we have another one in Madagascar. And those are two projects that are sort of in line to be developed as well. With the idea, all of those projects, what the idea is that we will bring the rare earth minerals. These are rare earth minerals that would otherwise go to China. We're going to bring them to the United States, to our facility in Utah, to be processed and produce rare earths right here in the U.S.
Well, that sounds like a major step forward, and that it always, well, in recent years it's been difficult in looking at the manipulation of the markets created by China. Are there other producers out there that other than China?
Well, yeah, there are certainly, but China dominates it. As I understand it, China mines roughly 70% of the rare earth minerals and processes 85 to 90% of the rare earth minerals globally. There is processing in Japan and Korea. Interestingly, in Europe, there are some downstream processing facilities. In Estonia, a company called Neo Performance Materials has a project in Estonia that is very successfully processing these minerals. And then I'd say there's a lot of smaller companies that are trying to get into this business and have developed some great technologies and have some great capabilities to process rare earth minerals. And so we're seeing it sort of across the board that it's increasing outside of China, but China is far and away the dominant producer.
So the effort in the United States is to ramp up our capability to be able uh, to produce domestically the what we need.
That's right. I mean, when you think about the applications for these minerals, a lot of it goes into our military aircraft, our defense, the missile guidance systems. These are prolific as a national security issue. But then there are also, hybrid electric vehicles, conventional internal combustion vehicles all utilize rare earth minerals. um, your earbuds that from your cell phone, your iPhones, those all have neodymium magnets in the little speakers that go in your earbuds. So you know, so there's a whole wide range of applications for these minerals, and I think again the biggest issue is national security, and how do we ensure national security if and being so reliant on a country like China for these critical minerals.
Yeah. Well, I thank you very much, Ross, for your insights into the whole issue of rare earths and energy fuels participation uh, uh, in really the investment climate in the United States. Uh, it's gratifying to see some of this stuff brought back to the United States, and we're really hoping that we can have some regulatory reform uh, in a way to expedite a lot of the projects that we have going now. So,
Well, yeah, I agree. I agree, John. I think there's a great opportunity. The U.S. is blessed with some great, lots of great minerals, and it's a shame that we're not taking advantage of producing them right here in the U.S. And as I mentioned before, a lot of the technology that was developed to process these minerals was developed here in the U.S. and has been exported. And so it's a shame that we're not taking advantage of our own internal capability. So we're excited to be a part of bringing it back to the U.S. and reestablishing these critical minerals being produced right here in the U.S. So it's a great time. I think it's sort of a renaissance of some of these minerals for us.
good. Well, thank you very much for taking the time with us this morning, or actually as part of the Mining Law Summit. And this has really been a focus on the investment climate in the United States. And I'm glad to see that Energy Fuels is part of that.
Well, thank you, and thanks for having me. I'm sorry I couldn't be there in person, but I really appreciate you doing this.
Well, you're very welcome.
All right,
Thank you.
John. Great to see you.
Well, we thank Ross Bhappu for that presentation. And what I'd like to do is Bernadette, can we see if Tim Snyder uh, and Colin McKenzie might be available that we can promote them. They both had some comments. Unfortunately, Dr. Bapu is back in New York, and uh, I see this is Tim Snyder. And Tim, you had some comments or observations on uh, on the presentations.
Yeah, so I just a couple of comments. I thought those two first presentations by Doug and Ross were great and very, very informative. One thing I wrote up a comment and submitted it, but better to talk about it. It seems that I've thought this for a long time that there's opportunities as for byproduct production uh, in from porphyry copper deposits, all the copper operations around the Southwest, to in various processing streams, whether it's leach solutions or smelter byproducts and slag and or slimes or tailings to extract minor minerals and a lot of critical minerals or rare earths. Uh, that hasn't been analyzed, I don't think, by the operators because it's a distraction and it would be small potatoes for them. But from a critical mineral standpoint for the U.S., it could be, in my mind, substantial. So there was an article that just came out in September in Science magazine talking about this exact thing, and it was a group of authors from Colorado School of Mines that attempted to catalog the opportunity around that from existing mines, uh, and and if you're able to produce any type of critical minerals from an existing mine, of course, what you're dealing with is a situation where the mining costs and all the infrastructure is already sunk, and therefore anything that you can extract would generally have a relatively high margin. I think the problem with existing operators is that margin, that amount of money that you can make off of it pales in significance to what they're already doing. Therefore, it's a distraction. And in mining, uh, there's a saying that you need to. The main thing is to keep the main thing the main thing, and therefore they don't like distractions and so forth. But it seems like from a government subsidy standpoint, that would be a great thing to have the government subsidize a complete study of that. And I'd like to see public money going toward analyzing that. Because we could, I believe we could find opportunities to make a lot of the products that we need quickly and without necessarily starting new mines. So that was a comment that I had.
Yeah, well, Tim, it sounds like you're making a good argument for the reconstitution of the U.S. Bureau of Mines. Uh,
Absolutely.
and plus the fact that the University of Arizona is really on the forefront of a lot of these technical issues, and of course we have so many of the existing mines south of town that would probably be in the forefront of looking at some of these issues.
Yep.
I see. And Colin McKenzie is also online with us here too. And Colin, you had uh, a couple of comments.
Yeah, yeah. So, and I forgot that Ross wouldn't be joining us today live, but so yeah, I could phrase these just as well as comments. And if Tim happened to have any thoughts on this, or you, John, I'd love to hear your thoughts. So, and I asked this question sort of from the perspective of cooperative extension, which supports and is really the leader of the Natural Resource Users Law and Policy Center, where I'm based at the U of A. So that's kind of the perspective in part that I have with these questions slash comment, which is that just this summer, James Litinsky, who's the CEO of MP Materials, who now owns the Mountain Pass rare earths mine, the only one in the U.S., described the rare earth minerals the following way that I found useful, and want to get Ross's take on this, and that is that the feedstock for physical AI is basically rare earth minerals. And so I had been curious, and the comment would be, to what extent is that in the realm of technology and the future of mining and the political landscape? To what extent is the critical minerals framing in terms of a critical minerals AI nexus? To what extent is that accurate or useful in terms of sort of a broader understanding of the dynamics at play? So since Ross isn't here, I'll just leave that as a comment. And then also a second comment that came up in listening to Ross's talk with you, John, was how this past April, the School of Mining, Engineering, and Mineral Resources organized the second annual Mining Social License Summit, which is very interesting. And one of the more interesting sort of offhand later in the event comments that I heard was from a representative of Florence Copper, an in situ operation out near Florence, Arizona, and central Arizona, mentioned that civil society perspectives, when they're shared, when they're brought into the fold, can help industry in this sense sort of look around the corner, given what might be blind spots. And so in that sense, I wanted to flag for the audience and for Ross perhaps. And the question originally was, to what extent would sort of expanded concepts of risk and expanded perspectives on risks look like from a materiality lens, both investment, but also in terms of social and environmental impacts potentially. And that thought and comment was sort of triggered by Energy Fuels Incorporated's uranium portfolio, and how there is some uranium development around the Grand Canyon, sort of relatively recently, newly at play again. And I just wanted to flag a 2024 USGS technical report by Carla Talusi. I think I'm probably mispronouncing her last name, who is a former Wallapai tribe chairwoman who co-authored a USGS report, and paraphrasing the title, something on expanded perspectives on risk in that context. So just the comment overall is in terms of communities in and around mines, that materiality lens, if that can and does anywhere sort of sharpen the issues in terms of both risk and how to manage it. So I'll just throw those comments out there.
Yeah, well, thank you, Colin, and maybe we can put some of those questions to the presentations later on this afternoon on AI.
Sounds good.
Well, thank you, Tim, and thank you, Colin, for the comments. And